Welcome. Many entrepreneurs assume that bookkeeping in Japan is just about recording expenses in a spreadsheet or tracking sales. But in reality, it's your first and most important line of defense against cash flow problems, tax penalties, and even issues with visa renewals. If you're running or planning to start a business in Japan as a foreign entrepreneur, understanding the country's bookkeeping standards is essential for staying compliant and setting yourself up for long-term success. And in this video, we'll walk through what every foreign entrepreneur should know about bookkeeping in Japan. We'll start with the legal requirements for all business types, including the kinds of records you must keep, how long to store them, and what the National Tax Agency expects from you. We'll also highlight key differences between Japan and other countries, like how fiscal years work, what counts as a deductible expense, and what kind of receipts are considered valid. Next, we'll help you understand when to manage bookkeeping yourself and when it's smarter to outsource to a bilingual accountant. You'll learn the essential monthly tasks you should stay on top of, like payroll, expenses, and bank reconciliation, to keep your books clean and audit-ready. We'll also cover how to prepare for year-end closing, known as Kessen, and how quarterly reviews help keep your business compliant. Finally, we'll explain how good bookkeeping directly supports your visa renewals and subsidy applications, and we'll point out the most common mistakes foreign founders make so you can avoid them from the start. Before we dive in, let's introduce the team behind SmartStart Japan. Tyson Bettino, co-founder and mentor to over 35 international companies in Japan, brings years of real startup experience. Next is Taejin Yoon, TJ Yoon, also a co-founder. Fluent in English and Japanese, TJ has helped over 30 businesses incorporate and secured more than 40 loans and subsidies. And I'm Heiken Wong, supporting founders through marketing strategy, incorporation, and immigration logistics. Together, we help you make your Japan launch as smooth and stress-free as possible. In Japan, all businesses, regardless of size, structure, or ownership, are legally required to maintain accurate and up-to-date bookkeeping records. This includes corporations, limited liability companies, self-employed individuals, and even those operating under the status of residence for entrepreneurship, such as the startup or business manager visa. Whether your company is newly incorporated or already in operation, you must track every financial transaction, maintain official records of all income and expenses, and store relevant documentation such as receipts and invoices. Bookkeeping is not only about staying organized, it is the foundational system that supports your tax filings, visa renewals, loan applications, and access to government subsidies or grants. Even businesses that are not yet profitable are expected to meet these standards, and failure to do so may result in regulatory scrutiny. Under Japanese law, business entities are required to follow double-entry bookkeeping standards and maintain detailed ledgers that align with the country's accounting and tax regulations. Key records, such as general journals, income statements, balance sheets, and supporting documentation, must be stored securely for a minimum of 7 years. This includes both digital and physical records, and specific formats may be required depending on your industry and reporting obligations. The National Tax Agency, NTA, expects businesses to prepare financial reports that reflect accurate and timely accounting practices. If your business cannot demonstrate proper bookkeeping during a tax, audit, or immigration review, it could result in significant delays, financial penalties, or worse, damage to your credibility as a business operator. If you come from a country such as the United States or a European nation, you may be accustomed to financial reporting based on frameworks like USGAAP or IFRS. However, Japan has its own distinct accounting standards and tax treatment rules, which can differ in important and sometimes unexpected ways. For instance, the Japanese fiscal year may not align with your home country's, and the rules around revenue recognition, deductible expenses, and consumption tax reporting follow unique local conventions. Business expenses that are deductible abroad may be non-deductible in Japan, and vice versa, particularly when it comes to entertainment, travel, and employee benefits. Additionally, many business procedures in Japan must comply with formal documentation requirements, including the use of receipts with Japanese tax-compliant information, such as the supplier's name and registered invoice number. Maintaining inaccurate records or failing to file your bookkeeping reports and tax returns on time can lead to a variety of legal and financial consequences. In cases where the tax authorities discover discrepancies, your business may be subject to amended tax assessments, late payment penalties, and interest charges, often totaling 10 to 35% of the outstanding amount. In more serious situations, failure to maintain proper books can trigger audits, which are both time-consuming and reputationally damaging. Moreover, if your company's bookkeeping is found to be disorganized during a visa renewal process, for example, under the Business Manager visa, it may raise concerns about your financial stability and jeopardize your immigration status. Ultimately, bookkeeping is not just a bureaucratic obligation, it is a direct reflection of your company's operational discipline and long-term viability in the Japanese market. Now that you understand the legal requirements and key differences in bookkeeping standards between Japan and other countries, the next question is one that every foreign founder eventually faces. Should I handle my bookkeeping on my own, or is it better to work with a professional accountant here in Japan? This decision can significantly affect how efficiently your business operates and how confidently you navigate tax season. In this section, we'll walk through the pros and cons of each approach, including cost comparisons, the complexity of Japanese tax filings, and when it makes sense to invest in a bilingual bookkeeping partner. Let's begin with cost. On the surface, doing your own bookkeeping might seem like the most affordable option. Many small business owners start this way, using spreadsheets or free software tools to manage income and expenses. However, as your business grows or the number of transactions increases, the time you spend on bookkeeping can quickly add up. More importantly, any mistakes, such as incorrectly filed taxes or missing documentation, can result in penalties that cost far more than a monthly accounting fee. In Japan, professional bookkeeping or outsourced accounting typically starts around 15,000 to 30,000 yen per month, depending on the size and complexity of your business. While it is an investment, it often pays for itself by reducing errors, saving time, and giving you peace of mind. Keeping up with monthly bookkeeping is one of the best ways to stay organized and reduce stress during tax season. Here's what you should be doing each month to keep your finances clean, compliant, and on track. Start by processing employee payroll. That includes calculating salaries, withholding taxes, and making contributions to social and labor insurance systems. Next, make sure all business expenses are recorded properly, with receipts attached and categorized according to Japan's bookkeeping standards. You'll also want to issue invoices for any services or sales, track outstanding payments, and follow up with clients when necessary. Don't forget to reconcile your bank statements with your accounting records. This helps catch errors early and keeps your books accurate. To stay on top of your cash flow, review your income and spending regularly, and forecast any large upcoming expenses. This gives you better control over your finances and helps you make smarter business decisions. And finally, know when to bring in help. If you're falling behind, making frequent mistakes, or just don't have the time, it may be worth working with a bookkeeper, especially as your business grows. Your books at the end of your fiscal year is called Kessen. This includes finalizing your income statement and balance sheet, calculating retained earnings, and adjusting for things like depreciation, allowances, and prepaid expenses. You'll also need to reconcile all accounts and prepare a tax return, with several supporting schedules, often in Japanese, which can require assistance from a certified accountant or tax advisor. If your company filed a blue tax return, you'll be eligible for certain deductions, but only if your books are accurate and filed on time. Because the Kessen process is more formalized than in many other countries, it's a good idea to begin preparation at least 1 to 2 months before your fiscal year ends. Depending on the size of your business and your consumption tax registration, you may be required to submit quarterly consumption tax filings, in addition to your year-end corporate tax return. Even if not required, reviewing financial performance quarterly, rather than just annually, can help you stay ahead of potential issues. Quarterly reports give you a clearer view of trends in revenue, costs, and cash flow, which makes it easier to make informed decisions throughout the year. Monthly reports, on the other hand, are useful for keeping your records current and ensuring there are no gaps or errors that could become problems later. By combining monthly bookkeeping with quarterly reviews, you'll stay prepared and avoid last-minute surprises at tax time. Complete records, you need consistency and traceability. Every number in your financial statement should be backed by clear documentation, receipts, contracts, payroll reports, and bank transactions. It's also important to store everything securely, whether physically or digitally, in a way that allows easy retrieval. The tax office may request data from several years back, so don't wait until an audit is announced to start organizing. Having a system in place and someone you trust to manage it can make the audit process straightforward and far less stressful. Beyond compliance and tax season prep, there's another reason why accurate bookkeeping in Japan is so critical, especially for foreign entrepreneurs. Your financial records don't just affect your business internally, they also play a key role in how immigration officers and government agencies evaluate the stability and legitimacy of your operations. If you're applying for, renewing, or maintaining a visa like the startup visa or business manager visa, clean and transparent bookkeeping can make a direct impact on your approval. And if you're seeking government subsidies or grants, your books will be one of the first things they review. Let's start with immigration. When you apply to renew a business manager visa or transition from a startup visa, one of the key requirements is proving that your business is operational, financially sound, and being managed appropriately. If your records are inconsistent, incomplete, or show no clear revenue activity, immigration officials may question whether your company is functioning as a real business. We've seen cases where poorly maintained books resulted in delayed visa renewals, or worse, rejections, because the applicant couldn't provide basic financial evidence. Clear income and expense records, bank statements, and proof of salary payments are often reviewed closely to confirm both legitimacy and business continuity. Immigration officials don't just glance at your numbers, they look for patterns that reflect financial health. That includes monthly cash flow trends, consistent business activity, and whether you're meeting the salary requirements for yourself or any staff you've hired. They may also look for evidence that your business is generating actual client transactions, such as issued invoices, receipts, and ongoing operational expenses. If your documents are vague or if there are large unexplained gaps, they may request additional information or postpone your visa decision. On the other hand, having professionally maintained, bilingual bookkeeping reports shows responsibility, preparation, and a clear commitment to a long-term business in Japan. Even the most well-intentioned entrepreneurs can run into trouble when managing their business finances in Japan. While the rules may seem straightforward at first glance, many foreign founders unknowingly make small bookkeeping mistakes that can lead to serious tax issues, cash flow confusion, or even delays in visa renewal. In this section, we'll walk through the 5 most common bookkeeping errors we see, and more importantly, how to avoid them. Mistake number 1, mixing personal and business expenses. One of the most frequent and damaging mistakes is the failure to separate personal and business transactions. Using your company's funds to pay for groceries, family travel, or personal shopping, even if reimbursed later, can cause accounting inconsistencies and raise red flags during tax audits. In Japan, clear separation between business and personal spending is not just good practice, it's a legal expectation. Every expense should be categorized, justified, and properly documented with matching bank records and receipts. Without this, your tax filings may be considered unreliable, which could lead to additional scrutiny from the National Tax Agency. Mistake number 2, misunderstanding the Japanese fiscal year or tax deadlines. Another major pitfall is a lack of understanding of Japan's fiscal and tax reporting schedule. Unlike countries that follow the calendar year, Japanese companies often choose a different fiscal year end, and this decision affects when your taxes are due, when you must close your books, and when to prepare your financial statements. Failing to register your chosen fiscal year, or missing key deadlines such as the blue return filing or consumption tax payments can result in fines, late fees, and lost tax benefits. To stay compliant, it's essential to plan backward from your tax deadline and ensure that bookkeeping tasks are up to date each month, not just at the end of the year. Even experienced business owners from overseas often overlook this detail, simply because it differs from their home country's system. Mistake number 3, not keeping proper receipts, including e-receipts. Japan places a high value on physical documentation, and failing to keep appropriate receipts is one of the most common ways businesses lose tax deductions. To claim a business expense, you must have a receipt that clearly shows the vendor name, transaction date, itemized amount, and in many cases, a tax-compliant invoice number under Japan's qualified invoice system. Digital receipts may be accepted, but only under strict conditions, and the format must match Japanese standards. If a receipt is missing or incomplete, the tax office may deny the expense entirely, even if the transaction appears in your bank statement. Keeping your receipts organized, both digitally and physically, is one of the easiest ways to protect your business come tax season. Reimbursements. Many small businesses forget to properly record reimbursements made to employees for work-related purchases. Whether it's a train ticket, a business lunch, or supplies paid for out of pocket, these costs must be recorded accurately to reflect both the expense and the repayment. If you reimburse an employee but don't document the transaction, your books will reflect inflated expenses or unaccounted for cash movement. Over time, this creates errors in your cash flow reports and may lead to misstatements in your year-end financial statements. To avoid this, you should implement a clear and consistent reimbursement process with proper forms, deadlines, and matching receipts. Mistake number 5, not working with a Japan-savvy accountant. Finally, one of the most costly mistakes is trying to manage everything on your own without local expertise. Bookkeeping and tax reporting in Japan involve unique procedures, language requirements, and government expectations that differ from those in most Western countries. Even if you use software like Free or Money Forward, you may still run into issues if the setup doesn't match your actual business operations. Working with a bilingual accountant or a bookkeeping partner who understands the local system not only saves time, it also reduces your risk of compliance problems and maximizes your eligible deductions. As your business grows, having the right financial partner becomes essential to staying confident and audit-ready year-round. Worried you might be making one of these common bookkeeping mistakes? You're definitely not alone, and the good news is most of these issues can be resolved quickly with the right support. At SmartStart, we specialize in helping foreign entrepreneurs clean up their books, stay compliant, and build simple, sustainable systems that actually work in Japan. Book a free 30-minute consultation with us, and we'll take the time to review your current setup, identify any gaps, and guide you on how to move forward with clarity and confidence. Just click the link below to schedule your session. We're here to help you build a strong, stable foundation for your business in Japan. Thank you for watching, and we look forward to supporting your growth in Japan, one step at a time.